Hi, I'm Brianne Olson, CEO of PacSun, and you're watching Taking Stock.
We are counting down to the close. Today is Monday, June 1st, and you are watching Taking Stock, the Middle East in focus. May jobs report coming out on Friday. Markets at record highs. Here to make sense of it all is Chris Versace, CIO at Tematica Research. Chris, first full day of June trading. What are your takeaways?
Pretty positive, I have to say. There were some questions about, are we going to move forward in these conversations between the U.S. and Iran? Some skirmishes over the weekend. Questions, but it seems the market is continuing to look past that, pushing higher. Really, Jensen Huang's commentaries out of the Computex event last night, reigniting even more enthusiasm for the tech trade, pushing the market, like I said, higher. Got to be careful though. Markets are overbought from a technical perspective, so we want to be careful as we get ready for that employment report that you talked about.
We've been hearing that talks with Iran are moving forward, then moving back, then moving forward, then moving back. Do you still think we're seeing that immediate reaction from the markets, or do you think traders have looked past this?
Wow, that's a great question. I would say that there's a section of the market that is still going to ping pong back and forth, right? Latest headlines, what are we doing? But I do think there are other people out there that are saying, and I put myself in this camp, wow, we haven't really seen wide-scale attacks, so I'm still cautiously optimistic. But we have to remember that it's still going to take a while for the pressure that's built up in the system to unwind.
All right, thank you so much. We'll bring you back. That was just the NYSE International Retail Forum participants and guests doing the honors for the close. Leaders from the Valuable Capital Group and Rakuten Securities up at the podium, ringing the bell. Let's take a look at the boards as we close out June 1st. The S&P 500 up 0.25%. The Dow up fractionally. The New York Stock Exchange Composite up fractionally. The Russell 2000 in the red by about 0.5%. We're going to bring Chris back in. So what are you going to be looking forward to in June?
Wow, well, so we've got a Fed meeting, we've got a whole swath of economic data coming this week. We got the ISM manufacturing PMI today, services later in the week. We'll be taking a real read on inflation pressures ahead of next week's CPI, PPI, but we've also got Apple's big event next week. So if you were thinking things were going to slow down because we're heading into June, forget it. It's going to be balls to the wall as we continue to chew through all these events.
We're definitely going to see the May jobs report on Friday. April came in a lot better than economists expected. What do you think we're going to see on Friday from the BLS?
So far, indications are that the numbers should be pretty good. Maybe a little surprise to the upside. We saw manufacturing employment pick up a little bit today in that ISM manufacturing report. We'll get another read on Wednesday, and I think expectations will start to solidify once we get ADP's take on the private sector and the ISM services PMI.
This will, of course, be Kevin Warsh's first meeting as Fed chair. What do you think he's going to, what are his biggest challenges going to be?
Well, I guess what everybody's wondering is, how can this guy possibly talk about cutting rates, given the inflation data that we've seen? Not just the hot stuff we saw in April, but the buildup, because it actually started to tick back up earlier this year and continued to rise, and all expectations are we're going to get some hot prints next week. So how does he rationalize this? Trimmed inflation or whatever you want to call it. It'll be interesting to see how he presents this. But remember, he is the head, but it's a committee that votes. I think a lot of people tend to forget that. A lot of spotlight on Warsh, but what is the committee going to do? We have other Fed speakers this week. We'll want to pay attention to what they have to say.
They did say at one point that if the conflict in Iran continued, there may be a rate hike. We've only really been talking about cuts lately. Do you think we could potentially see a hike?
If we get another round of those really hot CPI, PPI reports, I don't see how how they can't at least discuss a potential rate hike. We have other central banks around the world that are talking about hiking rates. As long as the employment market continues to hold up, and all indications are that it is, as long as inflation continues to not only run hot, but really stretch itself past that 2% target, at some point they're going to have to acknowledge it.
tech is really heating up and arguably leading the rallies that we've been seeing. What is your outlook for tech right now?
Well, so if we agree that AI is really leading this, we want to continue to follow, not only AI adoption, right, in the enterprise with the consumer, and we'll get some potentially big news on that next week coming out of Apple's event, but we want to follow also the expanded usage level of AI. And I would argue that we're just like we were back in 1999, 2000 with the internet. We didn't really have a sense of all the things we're going to be able to do with the internet that we do today. And I think AI is going to be the same way. So I see AI usage being a multi-year event.
Do you think there needs to be a broadening out of the different sectors? Do you think there's too much of a concentration? And where do you think it's going to go?
Well, I would push back on that. And I would say, a lot of people talk about, NVIDIA, Marvell, and the chip companies, understandably so. But in order to build these data centers, we need power, we need construction equipment, we need materials. So it's a lot more than just 3 or 4 companies that are really benefiting from this multi-year build-out.
All right, and anything else on the horizon? You mentioned Apple has a big conference coming up.
Oh, next week, WWDC 2026, baby. This is the event where they are finally expected to take the wraps off this revamped AI-enabled Siri. This could be the big catalyst that fosters a massive Apple iPhone upgrade cycle. That's what we'll be watching.
We've been seeing softer iPhone sales. How do you think that's going to play into the Apple story?
Well, look, iPhone is the biggest product that Apple has. To the extent that they can jumpstart the re-acceleration of that upgrade cycle, that's a big positive for them.
All right, Chris Versace, CIO at Tematica Research. Thank you so much for joining us and for your insights on taking stock.
Thanks for having me.
All right, we are going to walk over to the NYSE notables, but it is Polymarket time, the World Cup, less than 2 weeks away. It's going to kick off June 11th in Mexico. North America, of course, the host continent. Games will go on for about 30 days throughout the US, Canada, and Mexico. What is Polymarket saying? Polymarket says France and Spain are at 17%. They think that they're going to take it. England is right behind at 11%, and we have Argentina and Portugal. Polymarket says at 9%, so we're going to have to see that final game will be played at MetLife Stadium on July 19th. And now we're going to go to the NYSE notables. Dell has been rallying lately. It is up more than 10% today. That's after NVIDIA announced its RTX Spark super chip. And Dell is going to be using it in its upcoming laptop lineup. Dell has been popping lately. It recently reported strong earnings and a $6 billion infrastructure partnership announcement with Amazon Web Services. It was up about more than 35% after those earnings were released. And our next notable is Salesforce. That is up almost 10%, well over 9%. The company just committed to $2 billion to France by 2030, including AI innovation hubs in Paris. Bloomberg also reporting that Salesforce holds a stake in Anthropic, now worth $5 billion, and that's after Anthropic filed confidentially for an IPO at a $1 trillion valuation. And last time I was in San Francisco, I of course ran past the Salesforce building. It was amazing. And right here in New York, we have the Brooklyn Navy Yard, and locals pass it on foot, in car. But did you know that it is a hub of innovation? And my friend Chris Castellino from Cheddar has more on that story. Check it out.
Thousands of New Yorkers drive on the BQE every single day, passing these same old familiar buildings, without stopping to think, what's inside them?
Just beyond the off-ramps, hidden inside old warehouses, are New York's secret labs, quietly building the future.
This is where a lot of interesting raw materials are actually designed and developed.
We effectively delivered in 30 days what most people around the country couldn't.
We're primarily focused on the amphibious vehicle to detect mines and explosives.
This is where we have a collection of tens of thousands of microbes.
In this episode of NYC Innovates, we'll take an exclusive look inside the abandoned military base repurposed into Brooklyn's boldest tech park. We'll reveal the groundbreaking companies working behind the scenes and what it all means for New York. Let's go. Long before it was a hub of tech startups, the Brooklyn Navy Yard was a machine of war. The site was established in 1801 as one of America's first federal shipbuilding facilities, and over the next century and a half became the beating industrial heart of New York City. At its peak during World War II, more than 70,000 people passed through these gates every single day, building the ships that helped turn the tide of history.
Its nickname when the Navy was here was the Can-Do Shipyard. It was a place where the Navy innovated, the first diesel ship, the first steamship for the Navy. Some of the most momentous battleships were actually fully made here. The USS Arizona, which is sadly entombed in Pearl Harbor, was built here. And the USS Missouri, which is the ship where the Japanese signed the treaty at the end of the war, was also built here.
In 1966, the Navy decommissioned the yard. The ships had grown too tall to fit under the Brooklyn Bridge, and for a generation, the area sat dormant. It wasn't until 1981, when Mayor Ed Koch created the Brooklyn Navy Yard Development Corporation, that the seeds of revival were finally planted. And in 1996, New York City implemented a long-term capital investment strategy, sparking the site's remarkable growth.
It went from having only, probably a couple hundred employees as warehousing businesses back then to, I think, sometime in the early 2010s, it was about 3,000 or 4,000 people that worked here, and now it's grown to over 13,000.
Today, the Brooklyn Navy Yard spans about 50 buildings across 300 acres, housing more than 550 businesses. The campus generates an estimated $2.5 billion in annual economic impact for New York City. But getting here required hundreds of millions of dollars in public and private investment and a complete reimagining of what an industrial campus could be.
We really tried to bring in some strategic partners like New Lab, which is a tech accelerator, to really help extend the brand of the Navy Yard to a place that was about hard tech manufacturing and some other things that were a little more future oriented.
And it's not only deep tech that calls Brooklyn Navy Yard home. Green says about 40% of the companies work in the creative industries, supporting New York's arts and entertainment economy.
This building on the left is where the SNL set design and fabrication happens. Those sort of big, chunky buildings is Steiner Studios, which is a film and TV production facility. So that's 50 acres over there. You wouldn't know all of that is happening just to look at the exterior. So we're gonna go take a peek inside some of them.
Inside this maze of 6.5 million square feet of building space, the future is being built in unexpected ways. My first stop is Pliant Energy Systems, a marine robotics company developing technology that's been funded by the US Navy and recognized by NATO.
The origins of the company began with a marine biology and oceanography career I had a long time ago, and noticing how plants survived the wave crash. And if you want to harness kinetic energy of water, it has to be able to survive extreme events, has to be able to survive impact from objects.
Tucked inside this unassuming lab is the decade-long history of the company, from the very first prototype Velix to the test tank to their latest Sea Ray robot that could one day patrol the world's oceans.
Velix is a little black robot that has been all over the internet. I think it's been seen hundreds of millions of times by now. So that was a proof of concept. That was funded by the Office of Naval Research. And it was just to show how effective can undulating fins be. The same fins that create effective thrust in water, you can actually use them to crawl over land. So we even had it ice skate. It looks like an organism because the same principles, physics being what it is, materials will tend to fall into the same form with the same function. The analogy on land is more like a centipede with an infinite number of legs. The analogy in water is much more straightforward, like a cuttlefish or a stingray. This is actually the first robot we made up here. This is sort of the beginnings of the whole robotic program. We have a tank here that we use for single fin testing and miniature robot testing, if we have them in small. This is just a prototype fin. The tank is really well instrumented, so we will test the fin and we get the data we need to do the iterative process of developing it. The Navy initially wanted to know just how effective undulating propulsion could be. With the new contract, it's actually for a full-finned vehicle. So the Sea Ray and Velox prototypes have one fin down either side. The new contract with the Office of Naval Research are full fins, and each fin is independently actuated. So the ultimate goal, we think, is to get sea otter-like maneuverability. We won the NATO Diana Innovation Prize this year. Incredibly competitive. In our category, there's a 2% acceptance rate to the program, which is autonomy in unmanned systems. And that's been tremendous because now, outside of the US Navy, large parts of the world are seeing our technology, and we've been invited to all kinds of technical demonstration projects within the allied nations. Met some Ukrainian special operations. They, of course, are very interested.
As word of the technology spreads, some of the most unexpected industries are also calling for Planet's help.
We've also been contacted by some very large shrimp farmers, and they have stationary sensors in their shrimp pools, and they have hundreds of acres of shrimp pools. And they would like a mobile sensor, which our robot would be a mobile sensor moving around different levels of the shrimp pools, monitoring data, looking at the health of the shrimp, looking for infestations, without chopping up the shrimp with propellers.
Welcome back to Taking Stock. I'm joined now by Stu Wall. He is the CEO of SetPoint. It is a platform for private credit. Welcome, Stu.
Thanks for having me.
All right, so private credit has become a big story. What is driving the growth?
So we are in the biggest CapEx boom in history, and private credit is playing a huge role in that. So we've got about $4.4 trillion in CapEx this year. It's the biggest, about 14% of GDP. $650 billion of that's coming from the 5 hyperscalers, but a lot of that's coming from picks and shovels companies and people who are investing because of the big beautiful bills, really encouraging investment in the United States. That's going to drive GDP growth, it's going to drive productivity growth, and the demand for capital kind of outpaces the supply. Private credit, I think, is stepping in to fill the void. It's a little bit more long-term oriented, a little bit more flexible than bank capital and public credit, and so I think it's playing a really exciting role in the growth that we're seeing right now.
For people who are just learning about SetPoint, what are you doing?
Yeah, so SetPoint is the operating system for private credit or asset-backed finance. And there's kind of 2 big buckets of private credit. There's direct lending, so corporate loans to companies. A really big component is asset-backed. So anything that's secured by an interest in collateral, that could be a student loan, it could be a credit card, it could be a small business loan. All of that is this kind of multi-trillion-dollar industry that still runs on infrastructure built like 30 years ago. So email, Excel, and FTP folders. That kind of dated infrastructure is why you see issues like Tricolor committed fraud. It resulted in billions of dollars in losses. And SetPoint's here to fix that. So we organize and verify asset data. We do all the calculations for reporting and compliance, and we give visibility that's really not possible with Excel. So you can get an understanding of what's happening in your portfolio if you're a capital provider or an investor. And we really see kind of this new standard in private credit that's more transparent, more liquid than what we see today.
And what technology specifically are you using in order to achieve that?
So there's really 3 things that I think are super important. So one, I mean, there's a lot of talk about AI. I think it's incredibly important in the industry we're in. So there's a lot of kind of the most talented people in financial services, most talented people in our economy doing manual things, like looking at PDF documents and comparing that to a loan tape, or staring and comparing from 2 different Excel files. We think AI and LLMs have the potential to make those tasks much faster, more accurate, more efficient, and make products possible that weren't possible before. But you have to combine them with an orchestration layer that kind of connects and has deterministic software and experts. You put those 3 things together and you can put something in production that is zero defect, that is auditable, and I think that results in a private credit ecosystem that has much better data, much less fraud, and ultimately is more liquid.
What does the next chapter of this market actually look like?
So I think you're going to continue to see a massive boom in private credit that's going to fund a lot of this CapEx spend that we see happening. And I think a lot of that's going to be funded by retirement savings. So kind of the world is short on retirement income. And I think what a lot of people are seeing, I have a 401k, I'm sure you have a 401k, I'm not going to retire anytime soon. I don't need daily liquidity. And I think a lot of retirement accounts are going to start investing in private credit, which they are not daily liquid, but offer a premium and a great risk-adjusted return. I think that's going to be a good thing for retirement savers. It'll be a good thing for private credit. And what that market needs really is a new standard, where you have some of the things that public markets have, where you can do things like a daily NAV. You have transparency into the assets. You make those assets more liquid. That is the goal of SetPoint, is to kind of play a role in that. And I think that's where we see the market, in the next 5 to 10 years.
And what's next for SetPoint?
Yeah, I mean, I think we're really investing, I think, in creating this ecosystem. So our framing is where capital comes to work together. And you have kind of borrowers and lenders that are coming together. And I think there's kind of 2 things that are happening. One is there's a lot of trust that's built in those relationships. We kind of announced we're doing an event tomorrow with Cross River Bank. We did an event a month ago with Andreessen Horowitz, our lead investor, as well as Blue Owl. And so, building that trust and those counterparty relationships, but maybe more importantly, creating a new standard. So I think private credit historically has been very bespoke. All of the different facilities are different, the reporting's different, calculations are different. We think you can create a new standard in this industry that benefits the lenders, the borrowers, makes capital more accessible, more liquid, less fraud prone.
Stu Wall, CEO of SetPoint, thank you so much for joining us at the New York Stock Exchange.
Thanks for having me.
All right, we're going to go to break. We will be back in a minute. Welcome back to Taking Stock. Joining us now is Michael Casley. He is the CEO and chairman of Stablecoin Development Corp. Michael, welcome. What is SDEV and why does it exist?
Yeah, it's a great intro question. Thank you for having me. Stablecoin Development Corporation, or SDEV as you called it, is a on-chain holding company focused on stablecoin adjacent but profitable earning businesses. To date, we've focused our attention on the Sky Protocol. The Sky Protocol is the third largest stablecoin issuer behind Tether and Circle. And, we're really infatuated with the prospects of Sky Protocol in the sense that it's stands alone in the crypto category of yield-bearing stablecoins, is attractively valued, and is taking part in this secular growth of stablecoins.
All right, and the USDS just crossed $10 billion in supply. What does that number actually tell us?
Yeah, that number tells you that it's starting to work. The supply of USDS grew by more than 50% in 2025. It's up another 20% in 2026. The system is working, and here we're talking about decentralized yield-bearing stablecoins. So underlying that $10+ billion is $13+ billion of collateral, and that's been diversified into other stablecoins, real-world assets like CLOs, other projects. So it really does come down to diversification, the fact that you can build a resilient, safe portfolio that can back this system and ultimately grow with it to an institutional level scale.
All right, and can you walk us through the difference between a payment stablecoin and a yield-bearing system, and how does that impact investors?
Yeah, so payment stablecoins, that's still the the killer app for stablecoins generally probably is cross-border payments. And payment stablecoins, that's what they focus on. They focus on giving users the ability to send and transmit money quickly with instant settlement. They have other use cases like stable collateral for DeFi and borrowing. But yield-bearing stablecoins is the other sector, and this is meant to be, for power savers, for users, to the extent that when you own USDC, for example, you don't get a native rate of return. This is something that's front and focus with the latest Clarity Act resolutions, and that is, can idle capital be paid a rate of return for depositing stablecoins? So it's really meant to come up against the core use case of what banks offer, which is, an interest rate on your deposits. The yield-bearing stablecoins are much more attractive in the sense that they give users the ability to not only hold crypto wealth, but also participate and have an edge against inflation.
All right, and as we see stablecoin adoption scale, what will governance have to look like?
Yeah, governance, it's an important topic in the sense that you can't just have it being willy-nilly. You can't have one person at the helm. You need a risk committee. You need institutional analysis. It basically gets more complex, and I think that's part of the answer here where, instead of looking for more returns, faster returns, it's more, how can you do more complex things and spread apart your portfolio in a more diversified way? That's where a lot of these returns are coming from. Governance is important for something like Sky Protocol. It's really a consortium of all the holders who get a chance to vote. And so it's not run by one central team, but the holders themselves who are economically incentivized to make Sky more profitable.
All right, thank you. Michael Casley, CEO and Chairman of Stablecoin Development Corp, or SDEV, for joining us on Taking Stock.
Thank you.
All right, we're going to go to a break. We will see you shortly on the other side.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is Jargon Translator. Today's term is Loss Given Default, or LGD. LGD answers one critical question. When a borrower defaults, how much do you actually lose? If someone defaults on $100, you recover $90, LGD is 10%, i.e. $10. You recover nothing, LGD is 100%. This matters because default isn't binary. Two lenders can have the same default rate and completely different outcomes. LGD explains why secured lending behaves differently, why collateral matters, and why collections and restructuring are core credit functions. Probability of default gets more attention. LGD determines whether losses are survivable. This is why lenders obsess over recovery, not just origination. Defaults, trust me, they happen. Severe losses are optional. With that, that is your Jargon Translated. If there's a credit term you want explained before the cycle turns, put it in the comments and it just might make the cut. In the meantime, back over to you.
That's going to do it for us today on Taking Stocks. The first full day of trading for the month of June is now wrapped. Markets finishing in the green. The S&P rose in May by 5%. The Dow Jones rose by 3% in the same time span. Markets still rallying. Experts say tech is leading that charge. We're going to have so much more for you this week for both the opening bell and the closing bell. I will be hosting NYSE Live tomorrow starting at 9 a.m. Eastern, and JD Durkin will ring you down to the close. For Taking Stock, I'm Ashley Mastronardi. We'll see you tomorrow. Woo!